Welcome to Coffee and Crypto with Lee and Jimmie. I am Lee Reiners, joined as always by Jimmie Lenz. Jimmie, happy Friday.
Happy Friday. Happy nice Friday. It is beautiful. School starts on Monday. Can you believe
What?
it? Orientation,
What's
Monday
Yeah,
for
you
the
always
new
do a
students
lot for
coming
you
in.
run a program. You run a large program.
I do. I run
So
kind of a big program.
orientation week is quite a different experience for you than it is for me.
Oh, absolutely. It is
Yeah.
it is all encompassing, but I'm already seeing students around. People are coming by to see me. This is the fun time of year. I love this time in graduation. Those are like the
Yeah.
most fun times of the year. Everything else is good, but these are the real fun times when people are
It's
excited and they're jazzed up. And so, yeah, we're looking forward to it.
it's ramping up, man. Just
Yeah.
all of our local listeners, stay away from Target. Okay, this is if you go to Target this time
Yeah.
of year, it is absolute chaos,
And
right?
it's any Target,
Yeah,
because
any Target. Yep.
we're starting this week or this next week. Chapel Hill starts this next week. I believe State starts this next week, and the public schools start a week from Monday.
Yeah.
So
Yeah.
there is a lot of educational action.
So the program's starting. Classes are about to start here. Next week's
Yeah.
orientation. The week after, we get rolling. I'm teaching in the fall. Looking forward to welcoming my students back into the classroom. But in addition to all of that, Jimmie, right? We are working on some other things. We're always working on other things.
We're always working on other stuff.
But I think what we're kind of most known for outside the podcast is digital assets at Duke, right? Our annual conference.
Annual conference coming up
And
soon.
it always comes up for us, right?
Yeah.
It always happens fast for us. But just wanted to let folks know that the next conference will be February 4th through 6th,
Yep.
obviously 2026. And, we have begun planning. And so registration is not open yet, and we will let you know that it'll be opening up soon. And as always, we have limited slots available, so you want to make sure you register as soon as that registration opens up. I just want to let folks know, that if your company or you are interested in sponsoring, right, because we need sponsors to make this conference happen,
Yeah.
right? And if you're interested in sponsoring, let us know. If you're just interested in participating, speaking, whatever. I mean, we love, talking to people, kind of learning about what they're working on. We try to mix up the speakers, every
Mhm.
year to just keep pace of the industry and its evolutions. And I think we've done a great job of having people who really are at the forefront of what's going on in the digital assets landscape, Jimmie. And so, that just
Oh
requires
yeah. I
a
mean,
lot of
we have some.
outreach, a lot of communication. So just let us know if you have thoughts about the conference, regarding sponsorship, speakers, anything else. The lines of communication are always open at Digital Assets at Duke.
Lines of communication are always open. We love hearing from people. I mean, we really do. People think that I'm joking around when I say that, but we actually do love hearing from people. Thoughts about the conference, thoughts about the podcast are always very, very welcome. And the conference gets better every year because of our input, the input that we
Yeah.
receive from attendees, from sponsors. I mean, it's a very different kind of conference. We're not selling anything here. We are an open dialogue. We welcome all opinions, and so I think it does make it. I mean, everybody I talk to is like, you guys have such a different kind of conference. It is
Different
just,
vibe.
I can't go there and buy anything. Nothing's for sale. All I'm going to hear is a lot of really, really rich discussions. So
Mm-hmm. No
it's
doubt.
fun.
Yeah, it's a lot of fun. So as always, go to www.digitalassetsaduke.org, right? Digital Assets at Duke, just all one word .org to keep tabs on the conference and what we're up to. So love to hear from you.
Absolutely.
All right, Jimmie. With that, let's just dive in. As
Yeah.
always, a lot of news, and actually, last week I thought was a little, or this past week was a little slower, so it allows us to catch up on the agenda items that keep getting left off of our previous episodes. So.
Yeah.
But let's start with news from last Friday. Actually, I think this happened last Friday, which is the White House executive order signed by President Trump, opening up private markets, including digital assets, to be included in 401k plans.
Right.
So, instructing the Department of Labor to review existing rules and regulations, update those accordingly to allow these new assets to be included in 401k plans, right? So this was, I think something that was widely expected, right? The White House
Very
had said, no,
expected.
this was coming.
And this
obviously
has
the
been
crypto.
pushed for years, not
Oh
so much on
yeah,
the crypto side, but on the private asset side. That has
yeah,
been pushed for
exactly, and
years.
yeah. So, it references alternative assets, which were defined in the order to include private market investments, real estate, commodities, infrastructure projects, lifetime income strategies. I don't frankly know what that, maybe annuities.
Yeah,
And then also actively managed. I think that's a critical phrase there. Actively managed investment vehicles that are investing in digital assets, right?
right, right,
So that suggests that the plan couldn't just go out and buy like Bitcoin, right, and hold it in a wallet or something like that.
right.
Um, big news, obviously. That's what the crypto industry is focusing on, is the ability for for 401k plan participants to be exposed to crypto assets. Jimmie, you and I had a conversation a few weeks ago where we actually agreed,
We did.
surprisingly. It's actually not that surprising,
It's not that surprising.
on the push on behalf of private market
Right,
participants to open up to retail investors, right? So we
right.
agreed there, but let's just open it up, Jimmie. What are your
So,
thoughts on this here?
well, I mean, my thoughts are probably not that much different than yours. I mean, one of the things that people have to remember with 401k plans is the plan administrators have to agree to allow certain assets in. Right. So it doesn't mean just because this has been allowed that, oh, every 401k is going to offer this. It's not going to, folks. I hate to
Yeah,
tell you, 401ks move really, really, really slow. I mean, for most 401ks that I know of, and 403bs for those who are in academic type roles, they are pretty plain vanilla stuff. And when I say that, I mean mutual funds and some ETFs maybe, those lifestyle funds, things like that. 401ks are not going to be changing overnight. So if you
yeah.
think you're going to go into your 401k and put it all into some kind of private equity thing, yeah, that's not going to happen, folks. It's just not going to happen.
Well, you
I
shouldn't do
would,
it anyway, but yeah, fair
yeah, you
enough.
shouldn't do it anyway, but it's not going to happen. So I would guess that this is very slow to be adopted. I would think we don't see the first real changes in this probably for 12 months, I would think. And
Yeah,
that'll be, some financial services firms and things like that will probably open it up to their 401k. And remember, 401ks are the employees of the company, not the company, not the 401ks that administrate. So, Vanguard and Fidelity are huge 401k administrators,
yeah.
but that they still have to follow the plan of the company.
Yeah, and which
So,
are the spot the
which
in
are,
the
yeah,
sponsors,
the
right? In the
sponsors.
401k
Right,
parlance, right? So
right,
the sponsors are the employers themselves,
right.
and
So I don't see
the
things
employers
changing.
themselves will negotiate, with the administrators in terms of what to make available to their
Right,
employees, which
right.
who are the beneficiaries, right?
Yeah,
The
and
end
and they're
investors.
pretty conservative because
Very.
401k sponsors do get sued. I mean, it happens on a pretty not a regular basis, but it does happen. In particular, for those 401k sponsors that allow or incentivize their employees to buy their own company stock. We've seen
Yeah,
that
yeah.
go the wrong way many times, and so we'll see what happens with this. But I fully expect that this is a it's a sign, and it's certainly an indication by the administration kind of what they think, but it's not going to be adopted overnight. I would guess that less than 5% in a year, less than 10% of 401ks have changed it. That would be
Oh
my
wow.
that's my
Okay. All
that's
right.
my
Well,
yeah.
let's note that and revisit that.
Okay.
Yeah, a lot of sticky behavior. I actually agree with you on this. I think this is more noise than signal. Well, I guess the signal is that the administration is obviously very supportive of crypto and wants to open
And
it up
and,
to
and private assets.
and private assets for sure. Look, you're right. There's very, very sticky behavior here. There are class action lawyers who do nothing but sue plan sponsors.
Right.
They sue employers. And generally those lawsuits are based around, the suitability of investment options, the fees. The fees is a big one.
Yep.
Because there's a fiduciary duty to the beneficiaries here. And so we know that certainly in these private market products, the fees are quite high. And so everything that I've been kind of reading has suggested that, look, the executive order is helpful in the context, if you believe in, opening up private markets and digital assets to retail investors, it's helpful, but it's not enough,
Right.
right? And there's actually going to need to be legislation, to clarify, how these investment options fit within a sponsor's fiduciary duty
Right.
obligations here. Another, the article I sent you, and obviously we posted to the show notes, is from CoinDesk, where it really it said, look, most employees who are investing are passive.
Yeah.
They are generally in target date retirement funds. So, especially for employees who don't actively enroll. So now most employers, and this was allowed because of a change in the law, about 20 years ago, will have a default enrollment option, right?
Right.
So, which is good, right? I
And
mean,
sometimes the default
behavioral,
enrollment. Sometimes the
yeah,
default
exactly.
enrollment.
The default
I
enrollment,
actually have
right?
a
So,
story about that in just a second, but go ahead.
oh, okay. I
Yeah.
like that. Yeah. So the default option. So this means, like, look, you start a new job, and you're just busy doing a lot of things, learning the new job, figuring out, your other benefits, right? Health insurance, whatever it may be. And, you just don't have the capacity to think about, okay, the 401k and how it works and what should I invest in. And they just automatically enroll you.
Yeah.
Right. And they automatically then invest on your behalf, right? Because there's generally an employer match.
Right.
And, that automatic option is generally going to be a target date retirement fund.
Mm-hmm. Mm-hmm.
All right. So Vanguard says, so they do great studies here. So they say 61% of plans now offer automatic enrollment, which gets to 94% participation, which is great. And then it says nearly all auto enrollment plans designate target date funds as their default. So, unless those target date funds start including, and I just don't see Vanguard certainly, and they're kind of the leader in offering target date funds, and they've been skeptical of crypto. So
Yeah.
I just, I just think there's a lot of stickiness that means that you're probably not going to see employers even freaking
I just
offer
don't. Yeah. I
this
just don't.
stuff.
I
And
just
then
don't see it.
even if they do, I just don't see employees, opting
Making a
into
change.
crypto products,
Yeah,
making a
people
change,
people do not make changes in their 401ks. I mean, it's
which is
they
probably good, frankly, right? I mean,
probably good, probably better in the
passive,
long run.
buy and hold, a broad-based, low-cost index fund is,
Yep.
generally
Yep.
speaking, the way to go if you don't know any
That's
better.
that's normally the way to do it. And my story on the on the kind of that automatic enrollment, or that you have to overtly take yourself out of that,
Yeah.
was an experiment done by Richard Thaler years ago, about 20 years ago.
Okay.
Richard Thaler, famous economist,
Sure. Yeah.
behavioral economist,
Yep.
who was
Nobel winner.
a Nobel Prize winner. He was a student of Amos Tversky.
Mm-hmm.
And back in the day, when Dr. Tversky was at Stanford, and yes, he is the famous Tversky of Kahneman and Tversky fame. But Richard Thaler, this was an experiment that he did on, how could he incentivize people to do things in a certain way. And so what the experiment was is, would people opt out? And they typically don't.
Yeah.
So people know in their hearts that, hey, this is a good thing. And so if you enroll them in it, they'll stay in it. But if you give them the choice to enroll in it, then they'll put it off and they won't do
Yeah.
it. But if they have to opt out, they won't do that either. So
Yeah. Yep. But it'll be interesting to see, right? It'll obviously be very interesting to see, and also interesting to see if there's lawsuits. So we'll
yeah,
follow all of this. But Jimmie says no more than 10% of investors will be in crypto in a
yeah,
year. Okay.
in
Let's move on.
401ks.
401ks. 401ks.
Yeah,
That's right. Okay, moving on to a news story, right? Keeping with the broader trend of crypto treasury companies, right? So these are
yep,
companies that issue debt and equity and use the
yep,
proceeds to invest in crypto. Generally speaking, for a lot of these companies, there's really no operational business, or sometimes there's kind of a negligible operating
right.
business there. And so the latest here, and there's a lot of these that we don't cover. I mean, frankly, it's happening like every week
Oh, I was
here.
going to say it's going
Uh,
on every place.
yeah,
Yeah,
it's going on every place. It's I think you and I we've talked about it, right? It's generally nonsense here, but this one is relevant because it involves one of the president's businesses here, World Liberty Financial, or at least he owns a stake in it. So Alt Five, I actually think the company's pronounced Alts. So Alt Sigma Corporation has announced a $1.5 billion registered direct offering and concurrent private placement to buy World Liberty Financial's governance token. So World
Huh.
Liberty Financial
Yep.
is the president, and I think technically it's run by his sons.
His sons, yeah.
But he has an ownership stake in it. Frankly, World Liberty Financial has issued a stable coin. They call themselves a DeFi company. As far as I can tell, they do nothing DeFi at all. And so it's still a little bit uncertain in terms of what they plan on doing. But they have a governance token. Initially, Jimmie, if you recall, that governance token was not transferable.
Right.
But they
Right.
recently had a vote,
Yeah.
and the token holders, not surprisingly, voted to allow it to be transferable, and now you can buy and sell it on exchanges here.
Right, right. It was
So
it was
yeah, so
almo it was almost used like a staking token. That's why it
yeah,
wasn't transferable. That was it was very, very similar to a staking token, and so they wanted to make sure that they knew exactly what people's investment or was in the particular token. And so
that's
that
right.
it happens. I mean, they you do have instances where people are not allowed to transfer tokens, but that's just a code change to change that.
Yeah, exactly.
I actually
So
teach my,
that
my students how to do that. Change the
there you
code and
go.
leave it. Yeah, yeah, we do that in class.
That's cool, man. See,
Yeah, it is.
this is why you got to sign up for the fintech program, folks.
I think so.
Yeah, so 1.5 billion raised. And then the consideration paid for the securities in the private placement was contributed in the form of World Liberty Financial governance tokens from obviously World Liberty Financial here, and then the rest of the proceeds will be used to just go out and buy a World Liberty Financial. Now, I had never heard of Alt Sigma. They claim to be offering a number of fintech products, right? So they claim that they're providing next generation blockchain powered technologies for tokenization, trading, clearing, settlement, payment, and safekeeping. I watched these folks on, Zach Witkoff from the CEO of World Liberty Financial, and then the chief operating officer were on Squawk Box earlier this week, and I mentioned them talking about it and trying to spin it as like, look, this is an actual like kind of integration. There's a business use case for this. Is not just simply buying a token and putting it in a public wrapper. And to take advantage of the MNAV, as they say, right, the premium to
Right.
NAV. I mean, they claim that this is actually going to generate real business synergies and whatnot. I think it's kind of probably BS here.
Do you
But
really?
I don't know. Have you ever heard of this company?
No.
Right? And what's interesting is that they claim that it's the Fed. So they mentioned the stable coin, the USD1,
Right.
okay, is World Liberty's financials. So in the press release and on Squawk Box this week, they said that USD1 is the fastest growing stable coin in the world. Um, by what metric are they making that claim? I don't know. I mean, look, we talked about previously there was a $2 billion deal in which a UAE investment fund bought a stake in Binance for $2 billion and paid for that stake in the World Liberty Financial stablecoin.
Right.
Prior to that, I think the World Liberty Financial stablecoin USD1 had essentially zero in circulation, right? So yeah, I mean, if you go from 0 to 2 billion, that's pretty fast growth.
Pretty, pretty,
Does
pretty big.
Yeah, pretty big growth. Doesn't mean you're going to go, further. But who knows? I mean, look, if you want to get access to the president, this is a way to do it, right?
I don't know. Are you going to go that far?
Well, why do you think the UAE, right, paid for their stake in Binance with USD
With
one?
with those coins? Yeah,
Yeah.
you could be onto something. You could be onto
I
something.
mean, come on. So look, I don't know. I mean, we'll keep an eye on this here. I think, man, I just think these crypto treasury companies are just destined to collapse.
Yeah, there's it's I think it's one of those things that we'll wait and see kind of how they manifest themselves. But I would agree that there's probably a couple of things there that people should be keeping an eye on.
All right. Let's move on to stable coins, right? The stablecoin wars, as I like to call them.
Stablecoin wars.
So
Wow.
a great article in Unchained by Steve Ehrlich here on how a couple of the largest stablecoin issuers, including Circle, including Tether, And now, also including Stripe here, and Stripe is obviously a payments behemoth,
Right.
who has recently made some big moves in the stablecoin space. But they're all considering or actively working on launching their own layer one chain,
Yeah.
right? And and look, the way it works now is, let's take Circle as an example. USDC is available on multiple chains. I mean, I
Right.
think Ethereum is the biggest,
Yeah.
but there are others. I mean, I think there's like 10 or so chains. I forget. I keep track. I can't keep track here, but um, so this is an interesting development, Jimmy. I'm just curious from your perspective, why would a stablecoin issuer want to launch their own layer one blockchain?
I think it's insane. I think they don't have anything else in the development pipeline, and so they're being convinced this is a good idea. I think it's a terrible idea, personally.
Mhm. Mm.
Why would you segregate yourself that way? I mean, it's like saying you can only use my dollar bills in Target. You can't use them in another store. Why would you do that? I mean, it's just
Yeah.
it makes no sense whatsoever to do something like this, to say, oh, you have to use my network. It's I mean, if you go into a restaurant or a store, they'll take debit cards, they take MasterCard, they take Visa, they take American Express, they take Discover.
Mhm.
Why would you say, I'm only going to take Discover? I'm not going to take anything else. I won't take anything else. Sorry, you're going to have to go someplace else.
Yeah.
It's insane to do this. I have, I think they've run out of ideas. Honestly, I mean, I think that's what it is. And so that, somebody sold them on this idea. If they think that, oh well, people are going to have to use our chain because if they want to use our coin, it's like, hey folks, there's a lot of coins out there. There's a
Yeah.
lot of stable coins out there. And I was just telling Lee before we started here, I just submitted a paper on stablecoins to one of the academic journals, which I probably should just put it out in popular press, but we didn't. It's kind of long too, but I mean, this is if you think of something unique, not I'm going to limit the access to my coin. Why would you limit access to your coin? Because that's essentially what you're doing, right? Am I
Yeah.
missing something?
Yeah, I don't know. I agree with you actually. It kind of seems like a parlor trick. I mean, maybe we can get someone on the show or send us a note to kind of explain this. Why this is valuable. I mean, my best guess is that, look, the focus now for stablecoins is actually being used broadly as a medium of exchange in the real economy, right?
Yeah.
That's the push. I think everyone would agree that up till now, the primary value in stablecoins has been in the crypto economy, right?
Yep.
And that's how stablecoins have been used thus far, as a low cost way to buy and sell other cryptocurrencies. That advantage is because you have a stable settlement asset on chain, on blockchains where there's other activity, right? So Ethereum, you can use USDC on Ethereum to buy, to participate in, DeFi protocols that are also on Ethereum, right?
Yep.
If the stablecoin issuer, like, what else is going to exist, if anything, on the stablecoin issuer layer one chains,
Yeah.
right? You're sort of sacrificing the benefit of stablecoins as we know it. So I
Yeah.
just don't see. I mean, look, I think the another factor is the transaction fees. An article touches on this, right?
Yep.
Ethereum transaction fees can be high and can be volatile. Obviously, it's limited in scalability and transactions per second. So if you think stablecoins are the future of payments, you're just going to need to improve the efficiency of these chains.
Yeah.
But if there's nothing else on the chain, then what advantage is the stablecoin offering? I guess I don't know.
I just, I don't, like I say, I don't know why people would ever limit your market, would ever, put restrictions or on your market. I mean, if I were a stablecoin issuer, I'd want to get it into as many hands as possible, not say, oh no, you have to come through this door to get it. Like, why? Why would you do that? Or you have to come through this door to use it. Why would you do that? I, I, I,
Yeah,
I don't know who sold this bill of goods. I would guess it was an engineer, because engineers come up with these ideas that seem really cool, but when you think about them, it's like, yeah, but what am I going to use that for? I
yeah,
don't really need a bicycle that goes backwards. and it's like that just doesn't make a whole lot of sense to me unless I'm missing something. And hey, if I'm missing something, I'm sure
Let us
somebody
know.
out there will let me know.
Yeah.
But I just don't get this idea at all. When I saw it, it was like maybe I'm missing something here, but I don't think so.
Yeah, and look, I mean, there's no indication that they're going to stop circulating or issuing
No, 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 no.
stable coins on other chains. It's just that they're going to have their own layer one chain, and I'm assuming they would incentivize people. That's where they want the activity to occur here.
I don't. How are you going to incentivize them?
Yeah, I don't
You know,
I don't know.
I
I mean,
mean,
the whole premise is that if we're moving, if the economy is moving on chain, as the crypto industry says, you know, that means you would want multiple products on one chain,
right.
right? You don't like. I mean, Bitcoin is the outlier, right? Because the
Bitcoin's the
Bitcoin
outlier.
chain
Yeah,
does one thing and one thing only, and
pretty much.
its proponents say, well, that actually is its strength, right? Is
Yeah,
that it frankly never changes, but Bitcoin is unique, right?
yeah.
Other chains and other native crypto assets need to provide additional functionality for people to use them.
Hmm.
So yeah, I'm with you. All right, well, let's move on, Jimmy, to some kind of regulatory issues, right? Back to Genius,
Got
and I
to get
think
back
this
to that regulatory stuff.
back to that's my jam, Jimmy. Like
That is your jam.
we go to you for tech, and I get the regulatory stuff here. So back to Genius, right? The stablecoin law that President Trump recently signed. Uh, when making legislation, as you know, is a very messy process.
Yeah,
And it's kind of like the Ernest Hemingway quote, about how he went bankrupt, and it was something along the lines of, well, it was slowly and then all at once, right?
right.
And that's generally how legislation works, right? These ideas are floating around for a while. They get packaged into early draft bills. Those bills kind of sit around, and then all of a sudden, the White House and the powers that be decide, this is an immediate focus, and we're going to have Crypto Week. Remember Crypto Week? That was the week where it's like, okay, let's get these bills over the finish line here,
Yep.
right? And that just means that in the rush to pass legislation, there's a lot of issues that get overlooked or don't get discussed, right? Or whatever it may be. And then all of a sudden it's a law, and then folks are kind of pouring through it and considering it. And it's like, oh shit, actually, like this kind of provision is not working, or could create some problems here. So that's kind of the setup here to a couple of public letters that have been circulated recently by a unique coalition of groups, right? Groups
Yep.
that don't necessarily see eye to eye on everything. So
Yep.
the first is a letter from banking groups, so BPI, the Bank Policy Institute,
Right.
which represents the largest banks in the country. You have the American Bankers Association, which represents all banks,
Yep.
and then you have the Independent Community Bankers Association, ICBA, obviously representing smaller community banks. And then you have the Financial Services Forum and the Consumer Bankers Association.
Right.
They issued a public letter here titled "Closing the Payment of Interest Loophole for Stablecoins." Right, and we've talked about Genius, how it prohibits the payment of interest. I think there was a variety of reasons for that. I mean, one, I think the largest stablecoin issuers, like Circle, is more than happy with the status quo, not paying interest, right?
Right.
Because it helps their bottom line,
Oh,
but
in a
also
huge way.
in a huge way. But then also the banks, argued for this too, and they're concerned about deposit flight,
Yep.
right?
They
If
should be.
stablecoin, yeah, well, I mean, look, consumers are going to move their money to wherever they can get the best yield,
Yep.
right? So, but I understood the logic. I actually support the prohibition of interest because look, the bill calls them payment stablecoins, right? That's
Yep.
what the Genius regulates. Payment stablecoins. It's right there in the name. The whole intention is that these are instruments that are used for payments, right?
Yep.
They're not designed to be investments. Okay. They are not FDIC insured, so they're not, considered, at least in the eyes of the drafters, to be deposits, right? These are specifically instruments to be used as payments, and therefore, why do they need to pay interest? So this letter is expressing some concern around loopholes. There's always loopholes, Jimmy.
Always loopholes.
Always loopholes. Everyone, all these companies are hiring, hotshot lawyers, right?
Smart attorneys.
Smart attorneys who are very adept at
Yep.
finding and exploiting loopholes. And some of these loopholes were clearly known and actually called out, in the process of drafting and passing this
Right.
legislation, and they were just ignored. Um, so what are they? What are these loopholes, Jimmy? Well, I think let's just stick with USDC, and we've touched on this previously. So Okay, USDC does not pay holders interest, at least Circle does not pay holders interest or
Well, they're
yield, right? But you
right.
can park your if you park your USDC
Then you can get yield.
at Coinbase,
Yeah.
right? In a Coinbase custody wallet, then you do get a reward that's
Right.
paid by Coinbase. Now,
Right.
we also know that Coinbase is getting roughly half of Circle's reserve income, right?
Interesting, right?
Yeah, and then they're just taking some of that at least and then passing on rewards. But the important point is that the reward is paid to the holder of USDC by Coinbase, not
Right.
by
Not
Circle.
by Circle. And
So
that's a big difference. Yeah.
that's a big difference. And look, we can, and we've explored other contexts in which similar dynamics might play out. So when we talked
Sure.
about Walmart and Amazon potentially issuing their own stablecoin as it's
And
been
given
reported,
discounts. Yeah.
give a discount. Well, geez, I mean, look, a discount is economically equivalent to, interest, right?
Yeah.
I mean, it's a reward. But that, by the letter, at least of Genius, that is not prohibited. And so this letter is calling that out and saying, look, Congress has to close this kind of loophole. Because the concern amongst the banks, and obviously it's a self-serving concern. I mean, why would you issue the letter otherwise, right?
Right.
So take it with a grain of salt here. Is that, look, this could lead to deposit flight. It references a Treasury Department report. I think it's from the Treasury Borrowing
It
Advisory
it
Committee.
is.
So it's not necessarily
Feedback.
from, TBAC. It's not necessarily from, employees at the Treasury.
Right.
But it said, look, stablecoins could lead to as much as $6.6 trillion in deposit outflows, depending on whether they're able to offer interest or yield. And what banks are saying is, look, we take deposits. The business of banking is that we take deposits and we make loans, in the real economy, right? Stablecoin issuers don't do that because it's fully reserved, right? And
Right.
stablecoin issuers don't make loans. And so, if there's this massive deposit outflow, our ability to provide credit to the real economy will be hindered. Economic growth will suffer.
Yep.
If the supply of credit decreases, interest rates will go up. And so Congress really needs to close this loophole because of that impact to credit intermediation. Now, again, self-serving, obviously.
Yes.
But in my opinion, I think that they are right here. And I think this
Well, but
loophole
I
should
mean,
be closed.
so there are a couple of things here. One, I think that that is the case. I mean, you paying out deposits. How far down the line do you take it? How many steps away from the issuer do you take that? I mean,
Yeah.
and then if you do that, then do you get into this place where you say, well, can credit cards really give out cash back and discounts, because they're kind of acting like an account that they're not. Right? I mean,
Yeah.
credit cards do
Yeah.
exactly the same thing. And that's why people have different credit cards, right? Is, wow, I get 3% back or 2% back or whatever. I mean, folks, let me tell you how this really works. I mean, it's a very, very similar scheme. So I don't know how far out you can take something like that. The runoff in deposits is very possible. Scott Bessent talked about it, just a couple of weeks ago. Again, he had a little bit different numbers on it, but he had different time frames, and so that's that is out there. People are thinking about it, talking about it. I mean, stablecoin reserves can be deposited. You could have the reserves in dollars that are deposited
Yep.
in a bank.
Absolutely. In which
So
case, the
that's it.
bank would be allowed to lend those out.
Yeah, and that's called out in the act. I think it's a precarious place that we go to. I mean, and this has happened a couple of times where even airline rewards and things like that. Remember when they were going to tax those?
Yeah.
There have been talks about, because it's a rebate. These are ways that people kind of get around some of the things in banking. But essentially, it's the same thing. They are giving out, whenever you get a rebate or whenever you get a discount is just a rebate using another word.
Yeah.
And so, I don't know. We're in this place where I don't know how much you can drive that, Lee. Or do you just say no? No, you can do it. You leave the gate open and you allow people to do that. Now, the act, expressly prohibits this kind of thing. I'm not a fan of putting a lot of guardrails up around how companies can operate and what they can do. I mean, I understand the point that, they're just obfuscating the law by doing this kind of thing. But at some point, you say either we have a wide open market or we don't. And
Yeah.
I think we're getting into a kind of a precarious place there.
So you do not support the
No.
prohibition in Genius on, you'd rather just
Yeah.
have that be eliminated and
I would,
just
I would, so what I would rather have is, allow companies to, to do what they want to do. And in doing so, the market will say, yes, this works, or no, this doesn't. I think we're trying to protect too many companies from themselves.
yeah,
And why?
yeah.
I'm a fan of the free markets. And so if you do stupid stuff and you go out of business, too bad for you.
Yeah, I understand that point of view, and I'm generally supportive of that. The problem is that what if the entity doing the stupid stuff is too big to fail, right? And history
Well,
shows that
yeah, I mean,
history shows
it's
that the
only,
government will intervene to prevent a broader contagion. I think that's obviously the concern here with stablecoins, which is, look, if you allow them to compete on interest, right? Obviously, the money's going to flow to the highest, rate of interest here. How are they going to generate that interest? How are they going to compete? Well, it's generally probably going to be by doing riskier things, right? Now, obviously, there's reserve requirements that
there are
restrict
requirements.
that,
Yeah,
but even within that, I mean, obviously, there's opportunities, I think, to search for yield and whatnot. So I
sure.
think the concern then is obviously, if, look, these things are not FDIC insured, I'm sure the average,
They're not
you
FDIC insured, but
but they can be issued by, and this is one of back to my original concerns around the bill to begin with, is that it allows uninsured subsidiaries of FDIC insured banks to issue stable
yes,
coins.
yes.
And, that's going to be a distinction that is completely lost and unknown to the
Well,
average stablecoin investor. So they're going to say, wait a second, okay, if this thing is going under, right, if this stablecoin has broken the buck, I should be protected,
yeah,
right? They're not going to be like, oh well, because the bank is insured, but not the stablecoin insured, right? So look, yeah, I think it's a problem.
yeah.
I don't know the best way to address it, but you're right. I mean, look, there's if you use a credit card, why are you using a credit card? It's
Yeah,
because you're generally getting
they're getting
points or whatever
something
like
back.
that. So
Yeah.
yeah, so look, this is obviously a story we're going to keep an eye on. We'll table the other agenda items for next week. Another group was concerned about the ability for uninsured banks, depository institutions, to operate nationwide
Yeah.
and not have to get a state license in every state. So, people are starting to poke holes in some of this legislation, and it'll be interesting to see
There's a lot. I
if
mean,
they get
there's
addressed in market structure, because I think that's what they want, right? They ultimately want
right
these perceived gaps to be addressed
to
in
be
in
addressed.
market structure.
And we have a market structure bill coming up. We have a market
Yeah.
structure bill being,
Yep.
it is being discussed now. So, and even though it's kind of boring, it's probably the bigger of the two bills at the end of the
Yeah.
day.
Oh, it's much
Not
bigger.
probably, it is. It is the bigger of the two bills, but it doesn't have a cool name, and
Yeah.
it's probably not going to get quite the same amount of fanfare,
All
just the
right.
nature of it. So, anyway,
A lot
we
of
did.
fun, Jimmy. We still
Always
left
good.
a few agenda items, so we'll hit that next week. But hope you have a great weekend.
I hope you do the same. Look forward to do digital assets at Duke. Again, if folks have any
It's
questions,
happening.
just reach out.
Absolutely. Take care, Jimmy.
All right, take care.